All right, everybody, welcome back. Next up, we've got Pat Walker, one of my favorite follows on Twitter, and the nicest guy you'll meet on FinTwit for sure. So we're going to go through a ton of material today about how to find and maximize performance in true market leaders. And Pat, thanks again for agreeing to be a speaker. We really appreciate you having on. And yeah, really looking forward to hearing your presentation.
Very good. Richard and Ray, thank you both for having me. I really appreciate it. It was great talking to y'all just a little while ago. And I know you said I have, what, 2.5 hours to talk?
Yeah, 2.5 hours, just a little bit under that, no problem.
Here we go. Anyway, folks, I'm glad you're all here, and I won't waste your time. I won't take, I don't believe in doing that. So my name is Pat Walker, and a little bit of background about me, because I think this is relevant, is I'm married, I've got 4 kids, and why am I so serious about this? Well, it's a serious story. When I was, years ago, I taught on the university level. And then when I was 29 years old, my dad died. And my dad owned a hardware store. And you say, well, who cares? A, we were really close. And B, my mom had the business. And I was an investments manager then, a broker. And she sold the business. And she gave me the money to invest. And I realized right then and there, I have got to learn how to do this well. I was a broker, I was managing money, and I saw a lot of different brokers and what they were doing. And it just really, it made me sad because they really didn't care about the clients. It's like the commissions and stuff like this. So because of my background in research and teaching on the university level, I just went on a vision quest. And what did I do? I had to find out why stocks did what they did. And folks, you have to remember, this was 1986. Don't talk about the age thing, okay? There was no internet. There was nothing out there like that, all right? I'll be on, truth be told, when I first got into this, I used to go to the library and grab a Wall Street Journal and draw charts by hand to try to figure this out. But you know what was really good about it? I really got to learn the charts. So this is something I want to encourage for all of you, is don't think about this as a get-rich-quick scheme or idea or business. Dig deep. Go a little bit further than the other people. You'll be better for it. And remember this, you'll be better than you were, but then you'll also be better than the other people because you took the time to study the fundamentals and the technicals on why charts, why companies do what they do. And there's tremendous knowledge in that. So when I was involved with this, I remember in '86, I finally got to meet a guy that really had an impact on my life, and that was Martin Zweig. And if you don't know who Dr. Martin Zweig is, Google him. And I met him before the crash of '87. And he had a profound, we got to talk one-on-one, and he had a profound impact on me. And because of him, I was completely, I'm not going to take credit for myself. I was completely out of all stocks before the crash of '87. All my managed accounts were out. And for that, I'm thankful. But there was something that was going on there that really had a profound impact on me. And this is good for you. And it's this quote from Dave Landry. I credit Dave Landry. I'll believe in what I see and not in what I believe. Forget all the new stuff. Forget all the wild things going on. Forget all the wild gyrations and the junk that you hear everywhere. There's a tremendous amount of quote unquote news in price and volume. Follow it. Follow it. People, this is my own quote. People talk with their mouths and vote with their pocketbooks. Go where they're voting. And how is voting measured? It's measured in 2 ways. Price combined with volume. So that's just a little bit about my background. So I was doing a lot of research and things like this, trying to figure this out. And I met a good buddy of mine there in the office named Steve. And he says, hey, have you ever heard of Bill O'Neill? Oh, no. He said, have you ever heard of Investors Daily? No. He goes, oh man, you got to read his book. I will tell you, I read that book and I soaked it up. And Bill O'Neill changed my life. So then I said to myself, you know what? I started getting close with some people out there in California. And I was actually able to go to several different seminars and get to meet him. Had lunch with him a couple different times, just kind of maneuvered in. So learning from people. And that's one, again, the great things about Twitter, social media, you can learn. Try to find good people, good, solid people. Richard, try to find good, solid people that have good foundations, that they transfer that knowledge to you, and then you can use it. All right. So that's what I did. And O'Neill was great. And I'll also share this with you. Another man I met who really challenged me, I'll never forget, tilted his head back through his bifocals, was Ed Sakoda. We were talking about price movement, and he goes like this: "Why do you think that is?" And I said, "I'm not sure." He said, "Through the you might want to study that a little bit." And he challenged me, and it worked out really well. So here's the bottom line for you. There's basically, let's nuts and bolts this. There's two schools of analysis. There's fundamental and there's technical. Fundamentals, the numbers. Technicals, the charts. Both are relevant. Both can help you make money. Well, why don't we do this? Instead of excluding one, why don't we use the best of both? And this is what we do at Mission Winners. Use the best of both schools to help you make good money. Fundamental information combined with technical information. I was an IBD meetup co-leader for over 12 years, and I taught this stuff all the time, once a month on the stage, trying to explain and showing charts. And we're going to go through a bunch of charts today. You know, they say a picture's worth 1,000 words. I'm going to show you probably 30,000 words today. All right. And don't worry, I won't speak 30,000. Well, I might once I get going. Right, Richard? So anyway, I just wanted to share that with you. One of your great foundations, one of our great foundations is this. And the VIPs that are watching this right now are going to laugh. Look for charts that everybody can see. Clean and simple bases. And there's a reason why. Think about this, folks. Be pragmatic. You find a chart, you find a company that looks good, and the chart looks good. Don't you want to buy it? But don't you also want other people to see it and buy it? Of course. We're not going to move the stock. It takes other people buying with us. So we focus on companies with great earnings and our great sales. And we focus on companies that have clean and simple chart formations. And please, it doesn't need to be the cup and a handle. Okay? If you wait for the cup and a handle, you're going to starve to death. All right? Just a couple clean and simple base formations can help you make money. And again, charts that everybody can see. A couple other points for you. And maybe I shouldn't bring this up now, but I'm going to. Always limit losses. Why am I so hung up on a clean and simple base like this? It's just going sideways. It breaks out. It's a good above the line and it's bad below. It's that simple. So you can keep your losses much smaller than 7 to 8%. Off the record, Bill O'Neill used to say he'd like to keep losses at 3 to 4%. Okay? Keep them small. And I'm also going to share this with you. I'm encouraging you, please. No day trading, no scalping, no 5-minute charts. It'll send you to an early grave. You're locked onto the computer. You won't have a life. You have to watch every little tick. I will tell you, it used to drive me nuts. I'd see a stock make a move and it would drop and I'd be looking at a lesser time frame chart and I go, oh God, I better sell. And I'd sell it and it'd drop a little bit, but I'd still have a profit and the stock would take off and I'd never find a way to get back into it. And I know this as I sit here right now, you know what I'm talking about. Don't day trade. I encourage you, okay? Please, it's a request. Please try to avoid day trading. Please try to avoid scalping. Ride trends for as long as you can. Let the stock work for you instead of your keyboard and your mind and your eyes and your fingers. Let the stock work. Please, I can't, and I'm speaking from my heart, and I will tell you this. This is everything I'm telling you is I wish somebody would have told me, but there's nobody to tell me. So if it helps you, then I think we're doing a good thing. When it breaks out, you want to see a big volume surge. Why? It's confirmation that other people see it. Isn't that what you want? I want everybody to see what I see. It increases the potential that I'll buy it, but it increases the potential that they'll buy it. And we want that. We want a lot of people lifting the ship. And it works. It works great. Another point. I've got notes here on me. Ride trends. Ride trends for as long as possible. And I'm going to show you countless examples. You can say, Patrick, what do you mean by riding trends? Ride trends on the 8 EMA, the 21 EMA, and the 50 SMA. Ride trends. When you have a good profit, And this is really important. What will I do? If it starts to pause, I will sell 20% of my shares. Now we're going to get into trade psychology, and this is one of my degrees, okay? And this is very important. One of the issues that derails, and this is going to hit a nerve with you, one of the issues that hurts and negatively impacts most investors is stress. What's going on between our ears? I can't stress that enough. That's a bad pun, I'm sorry. But if you are extremely high stressed, do things, implement tactics to minimize that stress, because it'll derail your thought processes. Another good quote for you, it's not mine. Only the still pool reflects the stars. Think about that. Only the still pool reflects the stars. Focus on clean and simple patterns. Look for the volume surge, which is confirmation other people see it, and ride it. Just keep riding it. Manage it. Just let it work. You can have trends, and this is also important. Trading tactic for you. Sell 20% off after it's made a good move. Keep the other 80%. And when I say good move, I'm not talking about the stock went up 50 cents. No, I'm talking the stock's made a good move for you. You're up 10, 20%. Sell 20%. Keep the other 80%. Now we're going to get into trade psychology for you here. And this is important. By doing that, by locking in some profits, it does a couple of things for you. And folks, now we're getting deeper up here. It guarantees you a profit. Think about that. You've sold some, you're guaranteed a profit. Even if your remaining shares fall all the way to your buy price and you sell the rest, you still made money. By so doing, it puts you in control. It minimizes stress, and stress derails good decision making. You've guaranteed the profit, which allows you to do something. You've dropped your stress level, which leads to clearer decision making and allows you to ride the stock much, much longer, knowing no matter what happens, you're going to make money. Ponder that for a minute. Owning a stock, and you can say to yourself every night, no matter what happens, I've already made money. There you go. Another quote for you. You'll never go broke taking a profit. That's a lie. If your losses are bigger than your profits, you'll go broke. So by default, limit your losses and ride profits for as long as humanly possible. And team, I'm going to bare my heart and soul to you. I will tell you this. These are all things that I wish somebody had told me when I was doing this, when I was first getting into this, because I'll say it again, it was a pressure cooker. First, helping and supporting my mom, but at the same time, I was married, I am married, and I'm grateful for that. And I have 4 kids. I had 4 kids in private schools, private Christian school at the same time. My wife was a stay-at-home mom, raising a family. She was working hard. I had to make it happen. I had to figure this out. I didn't have a choice. And so, yeah, I worked really hard at it. I worked really, really hard trying to figure out what works, why it works, and then stick with it and just focus on clean and simple. So I covered a lot right there, but I just needed to share that with you. So here's some foundations for you. And this is important. By the way, I'm a research hound. I'll hold that up. Can you see that? This is an article from Investors Daily, May 4th, 2011. And I'm not going to read the whole thing to you, please. That would be rude. It would be insulting to you. I don't believe in doing that. The headline on this, breakouts work best when you follow the rules. And this is important. I'd like you to listen to these 2 paragraphs. Just soak this up. This is why you're here. From August 2007 through October 2007, the market was in a confirmed rally. Okay, we like those follow-through days, correct? IBD identified 39 breakouts. Each offered a valid buy point or a buy range and had big volume on the breakout. Investors Daily had identified 39 breakouts, all right? The composite rating was 88 or better on all of them. So now we have a statistically valid sample, 39 breakouts, and they all had a composite rating of 88 or higher. So you can say to yourself, well, that's simple. That's what I'll do from now on. No, we're going to take it a step further. The top performing tier. Listen to this. This will change your world if you want it to. The top performing tier, 39 stocks broke out. 10 stocks of those 39 did 4 to 10 times better than the NASDAQ's 11.5% gain. 4 to 10 times better than the move in the NASDAQ. That's dramatic. Isn't that what you want? 10 stocks did 4 to 10 times better. But this is where it gets good. All of them had a composite rating of at least 96. Now there's an edge for you that you can utilize. I need to pause here and share this. This is very important. Please know this. I do not work for Investors Daily. I do not work for MarketSmith. I was in the beta test group for the development of the original product called Daily Graphs Online. They invited me years ago, so I know it inside and out. But know this, I'm being completely objective. I pay the regular price as everybody else. I get no discounts, finder fees, rebates, specials of anything. I'm just a regular guy. So I need to share that with you as a disclaimer, but also so that I maintain my objectivity and hopefully credibility for you. So there's the top tier. All had a composite rating of at least 96. The second tier, 9 stocks did roughly 2 to 3 times better than the NASDAQ's gain. Would you be happy with that? I mean, folks, think about that. Yeah, the market was up 10% and I'm up 20 to 30. Yeah, you know, it's okay. That's huge. That changes lives. I'm going to say this again. 9 stocks did roughly 2 to 3 times better than the NASDAQ's gain. 7 of the 9 had a composite rating of at least, you'll love this, 97. 7 of the 9. There we go. 7 were in the top 30 industry groups. 7. Isn't that what you want? 2 were thin, but the average gain was 32%. The other 2 stocks, by the way, were still in the top third of all industry groups. So now we're building a foundation here. We know what to look for. We look for stocks that have either great earnings and are great sales, and I'm going to quantify that too next. Can I do that, Richard? Is that cool with you? Permission? Here we go. This is more data. And again, I'm a data hound, but we can use this. You can use this data. When Richard asked me to do this, I go, yeah, I love helping people. I mean, it makes me feel good when I sit there and people say, hey, you know what? I'm finally getting this. It's like, yeah, man, I'm grateful. I'm grateful for that, for you. Here we go. In a study, this is real. This isn't opinions. In a study of the 600 most successful stocks from 1952 to 2001, folks, that's almost 50 years. That again is a statistically valid sample in the history of the United States stock market. All right. Almost 50 years. Are you ready for this? The 600 most successful stocks over almost 50 years. 600 of them. Here you go. 3 out of 4 had earnings of 70% or higher before they broke out. 3 out of 4. That is an edge that you can use. And do we? Oh, yeah, we do. Oh, yes, definitely. And you can too. 3 out of 4, earnings up 70% or higher. The 1/4 that did not have earnings up 70% or higher, the quarter after they broke out, the very next quarter, the earnings were up 90%. 90. So here we go. Think about this. Let's just kind of wrap this up, and then we're going to combine some things together. And then we're going to look at some charts. You want to do this, and you want to be successful. My advice to you, and these are, I'm speaking from my heart, things that I wish somebody had told me. Turn off all the noise. Don't get wrapped up with all the stuff on cable TV. And I'm not knocking cable TV. Also, please don't get wrapped up in all the political stuff that's going on. And when I say that, that is not an endorsement or a disendorsement of any party. Okay? I will tell you that right now. But focus, be aware of the news, but focus on what's going on with the companies. Right? People talk with their mouths and vote with their pocketbooks. Go with their voting. Foundations. Focus on stocks. And I do this. I have screens that set this up. Focus on stocks in the top 40 or 50 industry groups. Focus on stocks with a composite rating of 88 or 90 or higher. I'm giving you a recipe for a great cake, folks. Focus on stocks that are over $15 a share. I mean, this is not gray, okay? This is hard and fast stuff. Over $15 a share. Focus on stocks that trade more than 200,000 shares a day. Say it again. Focus on stocks in the top 40 or 50 industry groups. Focus on stocks that are above the 50-day, that are within 20% of 52-week highs. I'll say it again, that have an accumulation distribution of A or B. If you focus on those, you will dramatically improve your investing results. Notice I didn't say trading results, investing results. It'll help you. And again, I'm speaking from my heart. This is stuff I wish somebody had told me, but there was nobody out there to tell me. So, I mean, I still remember calling my good friend Tommy Edison when he invented the light bulb. You know, we didn't have electricity. Okay, I'm teasing, but I just had to go with that. Richard's laughing. I like that. So and then finally, like I said again, mindset. I like to challenge people. And so I'm challenging you. Do you want to do this? Do you really want to do this? If you say yes, yes, I do. I want to do things that can help me, that can help my family. Those are great things. You've made up your mind. Now you have some foundations. Apply them. Turn off the news. Turn off the noise. You know fundamentally what to look for. You know technically what to look for. Apply those and you will make money. And when you're wrong, and you will be wrong, always limit your losses. Banish this thought from your mind. Oh, it has to come back. Why? Because you own it? And I'm not trying to sound hardcore here, folks. Why? Because you own it? It doesn't know you exist. It's not a living entity. Just get in line with it and ride it for as long as possible, but always limit losses. And you will be light years ahead of more people. Like I said, I've been doing this since 1986 and supported a family of 6. I had to do this. I didn't have a choice. But am I complaining? No, I love it. It's a great challenge. And you know what? I commend all of you. You know why? It's a beautiful Saturday afternoon wherever you are, and you're doing this instead. While everybody else is out horsing around, you're getting better. And that's what sets you apart from other people, is working at it. And I'm not saying that as a pep talk. I'm just being brutally blunt with you. All right. And I stress again, stuff that I wish somebody had said to me. Somebody would have said, hey, Pat, I'm going to tell you something. I want you to focus on stocks that have these numbers, these earnings numbers, and or these sales numbers. By the way, that's very important. I said something there. And or 40% earnings, or it can be both, and or 40% average sales for 2 quarters. You will dramatically improve your investing results. I promise it works. And when it doesn't work, limit losses. Please limit losses because you'll be wrong. So Richard, should we look at some charts?
Yeah, let's get into it. Let's talk price action.
By the way, that's very important. I said something.
And if you'd be able to mute the video that's playing, just so there's no echo, that'd be great.
I'm sorry, go ahead.
You're playing the video, the live stream at the same time. If you'd be able to mute that, that'd be great. So there's just no echo.
Yeah, I see it looping in the background.
Yeah, I don't hear it too much. So I think we can go ahead and get going.
Okay. Well, yeah. What can I do to I'm not trying to be irritating here. I apologize.
No, it's all good. If you're able to open up your internet browser and find the YouTube link wherever that's playing, wherever you're watching the video, you can press the mute button on the volume key.
Okay. I'm looking here for it, buddy. I'm looking at YouTube.
It's all good.
Oh, there it is.
Yeah. So if you
check it out, man.
Let's do it.
Isn't that great?
Yep. So Pat, you provided with us with a great overview of what the fundamental side of things to look for. So now let's get into the nitty gritty and talk technicals. Let's do it.
Right on. Okay. So can you see my charts right here, NIO?
Yep. I can see it.
All right. Good. We're going to rock and roll here. Okay, folks. I'm going to give you the fundamentals on a lot of these and talk about them. First off, and I say this all the time at Mission Winners, and you've seen me post it on Twitter, all right? Focus on clean and simple basis that everybody can see. Simple flat basis. Again, it doesn't need to be the cup and handle, but look at this right here. Just a simple flat base, and it lifts off right there. People talk with their mouths and vote with their pocketbooks. Look at the volume surge on that beast. That's sweet, and it lifts off. And then it goes sideways, and then it lifts off again. And then it goes sideways, lifts up here a little bit on volume, and then it lifts off again. We bought this 3 times. Now, I talk a lot about earnings and or sales numbers. When we bought this the first time, you can see it on the chart. Revenue's up 140%, folks. That's big tuna. That's what we want. Oh, also, I will tell you this. It was in the leading groups when it broke out. Leading stocks and leading groups. And that is a good move. NIO.
Yeah.
And another point I want to bring up to you that will really help you. These are my charts. A suggestion for you, look at these on your system. Go back and train your eyes on what to look. I tell people that all the time. Also want to bring up another point for you. You can say, hey, Patrick, you've got black background. I'm really big on protecting my eyes, and I'm sure you are too. Just try to make sure that you have a high resolution. This to me is a really good resolution for seeing clearly. The lighter background is harder for specific price bar resolution. So that's why I use a black background. I'm not telling you what to do, but from some of the things that have happened to me in my eyes in the lifetime, this really helps me. And if it helps you, then it's a good thing.
Sure.
Should we do another one?
Yeah, let's go through a bunch.
Okay, here we go, man. This is like Christmas. We're just going to go on here.
Yep.
Here we go. Next chart.
Yeah. And Pat, by the way, a lot of the questions I see are about position management, not just the buy point. So if you could talk about kind of your buys and sells, I think that'd be great for people.
Okay, good. Let's talk a little bit. Can we talk about that now?
Let's do it.
Okay, let's go. Team, again, I was an IBD meetup co-leader for years. All right. I'm firmly ingrained in the system. I love Bill O'Neill. I'll say it again. He changed my life. I'm just laying the cards on the table and telling you this. Here's a great tactic for you, and it's the real world. Okay. Can you see that?
Mm-hmm.
There you go. Yeah, I've been to those meetings. Okay, and got pretty wrapped up in it. So here we go. This is for you. I'm going to hold this up and tell me if you can see that, Richard.
I can't quite see the focus. It says like 5 to 6 stocks, all that. Yeah.
Okay,
Yeah.
I'll tell you what I'll do, buddy. I'm going to read
If you could read it. Yeah, go ahead.
Yeah, let's do this. In fact, you know what we're going to do? We're going to talk about the pyramiding side. So I'm going to go very slow for you. And this is very important, folks. This is good investing. Please do not buy your total position at one time. Do not make your first buy the entire position, because if it fails, your loss is going to be bigger. And we don't want that. That protects financial capital. That protects emotional capital. So here we go. Your first position. And I'm going to assume, we're going to do some numbers here, folks. You have a $100,000 portfolio, okay? And your goal is to own, we'll say, 5 stocks, all right? 5 stocks. Your first buy, you're going to put, I'm going to really be specific here. You're going to put in one stock, you're going to put, and I'm going to get this right, $20,000 in it. You have a $100,000 portfolio divided by 5 is 20,000, correct? Mm-hmm. Your goal is to put $20,000 in a stock. Rules of proper pyramiding. Your first buy, when it pushes through the pivot, you buy $10,000 worth. Okay? You start with 10. Your goal is to own 20,000. You start with 10. If the stock advances, okay, 2 to 2.5%, you buy $6,000 more. You buy 10,000, and then you buy 6,000. If the stock advances another 2 to 2.5%, all right, you buy 4,000. Your goal was to get up to 20,000. You started with $10,000 first buy, 6 on the second, 4,000 on the third. In each instance, on your second and third buy, and I'm speaking slowly here, on your second and third buy, you do 6,000 and 4,000. only if the stock advances in price. If the stock does not advance in price, do not buy more. And I'm going to say it again. If the stock does not advance in price, do not buy more. Please. I'm going to say this also. Never, never average down. Never. You were wrong. Don't compound it with getting more wrong. All right? I've seen other people blow up. I mean, I'll tell you this, the VIPs knows, I've had grown men call me up crying, saying, I can't do this anymore. I'm getting killed. And we have to be good at risk control. I can't stress that enough. Maintain your composure and control risk. Anyway, that's rules of proper pyramiding, and it works. And if it doesn't go up, you don't buy more. So there you go. What's another good question, Richard?
Oh, let's go ahead and talk position management as well. Once you've made that buy through that clean and simple pivot, how do you manage that? How do you use your different moving averages? And maybe for people who aren't familiar with it, what moving averages are you using?
Great question. I use the 50-day moving average. I use the 21 exponential moving average, 21, and I use the 8-period exponential moving average. I started using the 8-period 20 plus years ago, long before everybody started using it. And it was my trading partner back then, who was a wizard. Him and I, you can say, how did you get to the 8? It took about 2 years of studying charts together every day before we finally honed it down to the 8. And now it's ironic, a lot of people use it. I use the 50-day to ride the longer term trend, shorter term, the 21 exponential moving average, and then I run it tighter with the 8 exponential. If I'm really close to my buy price, I will sell some losing the 8-period exponential. Remember this, folks. I'm going to say this, and I'm looking right at the camera. Please, please never let a good profit turn into a loss. Never. And when I say good profit, I'm not talking that you're up $1. Okay, I don't care about that. All right. Don't ever do that. Maintain your control and your composure, and you will do better. So it advances in price, like we talked about rules of proper pyramiding. You buy more, and then you let it work for you. Let it work and trend for you. Like we're looking right here at Tesla, these buys on Tesla, and after it's made a good move, you know what you could do? See where it rallies up right here and it starts to pull back? You see the volume on that those bars? You know what you could do? Sell some. You say, quantify that, Patrick. Sell 20%. Sell just 20%. That's all. If it starts to, right in here, meander around, sit tight, you've got profits from lower, let it work. And then it lifts off again on a volume pickup that you see right there. You could buy more. Why? It's a long base breakout. It's a clean and simple base breakout. You can buy more and let it work. Notice the trend up the 8-period, which is the yellow line, and the 21 EMA. And we had a couple of VIPs that last year on this stock made $1 million on Tesla. Now, I'm not recommending buy it now, okay? Doesn't fit right now. But the point is this, focus on clean and simple base breakouts that everybody can see and look for that volume surge when it pushes through that clean and simple line. And also, I'll say this again, never, ever let a good profit turn into a loss. Ride it for as long as you can and let it work. I'm going to share this with you too. And some people say this is heresy, but I do have to share this. After you've got a stock that's made a really good run, take it off your front page. Don't even look at it. Have a limit alert set. Okay. Don't even look at it. Why? You'll get wiggled around too much. Just let it work and you'll do much better. That's what I do. I'll take it off my front page and it's on the second page. I have a price alert set. Okay. I'm not getting sloppy, but don't micromanage it. You'll do much better. Anyway, here we go.
Yep. And let's talk through a hypothetical trade. We can even use Tesla here. Say you buy it perfectly right, volume's coming in, it moves up quickly 15, 20%. In that case, as you mentioned before, you're maybe taking 20% off the trade. So it's always profitable.
But may I say one thing?
Yeah, go ahead.
Didn't mean to interrupt. I apologize, Richard.
Oh, go for it.
But this is good, man. This is great. Folks, you all ask good questions. I love this. This is very important. Only sell more when the stock starts to pull back a little bit, stall a bit. And I know Richard knows that too. Richard's a sharp guy. But team, don't sell if the stock's moving up. Okay. Once it starts to stall, you can sell some. There is a caveat to this though. If you see a stock that's made a really fast extended move, okay, I'm looking at the Tesla chart, a stock that's made a really fast extended move and it puts in a big reversal bar and starts to reverse down on a big pickup in volume, that indicates that the sellers are overtaking the buyers. There's another spot that you can sell 20% or 10%. That's all. Let price and volume tell you what to do. And I'll say this again, it's really important for a major portion of that move on Tesla and another one we're going to show, NIO. I didn't even have them on my front page. I had price alerts set, but just let them go. Let them work. That helps you.
Perfect. And Stephen had a really good question. He asked, when you are buying out of different bases, are you starting over with the pyramiding 50, 30, 20, or is he only doing 50 at the first buy out of a base and then 30% on the next base?
50 and 30, 20, always, but this is very important. Only invest more in clean and simple base breakouts. Let's suppose that your goal is the first buy, you're going to buy $20,000 worth of a stock. That is only on clean and simple base breakouts of a leading stock in a leading group, and it's pushing through on volume, and you have a good market. That's why the M comes first in mission winners. The M in mission winners is the market. If the market's bad, just leave it alone. Don't do anything. Just wait. Preserve financial capital and preserve emotional capital, psychological capital. I mean, it'll chew you up. Like I said, it'll just mess your head up. And then you can get so down about it and frustrated that when things do get better, you're afraid, you're gun shy, and you miss the great opportunities. Really protect what's up here. I can't stress that enough. I really can't. Anyway, Richard, I'm sorry if I ranted there, but just wanted to lay that out.
No, that was perfect. And getting back to the hypothetical where you're up nicely, you've taken some off the trade. Could you talk about what would make you sell the rest of your position based on the moving averages you use? Like how much you sell when it breaks to 8, 21, and 50?
Great question. Let's suppose the stock's made a good move and we've sold off 20%. Okay, a fast move, and it started to stall. This also leads to a point. You can look at the chart, the daily chart, and when you see a stock making a really hard, fast move and it's really extended in price, watch that closely because that could be a potential spot for exhaustion. You could sell a little bit into that. If the stock runs up, goes up, and then reverses down and puts in a big reversal bar, I'm looking primarily at the daily. That can be an opportunity to sell some. Not all, just some. You could say quantify the number. And again, that's the statistics in me. 20%, sell 20%. It's good for the pocketbook and it's good for the head. It means that no matter what happens, you're going to make money. You're in the driver's seat. That allows you to think clearer. So stock keeps falling, you could sell another 20%. The whole time I'm looking at day charts. The VIPs ask this a lot, and I'll share this with you. I look at weekly charts. I look at daily charts. I look at hourly charts if I need to, and sometimes 30-minute charts, and maybe I'll fine-tune it down to a 10-minute chart. That's it. I don't think I've looked at a 5-minute chart this year. All right. There's too much emotion in those 5-minute charts. Now, that's just for me. If it works for you, good. But for me, I found over 30 years plus, there's too much emotion there. Why mess with it? And I'll tell you something too. Nothing, and this is going to strike a nerve with many of you. How many of you have seen something really wiggle on a shorter time frame and you go, oh my God, I got to sell. And you sell it, and then you look at the daily chart and you're going, that's nothing. And the stock starts to advance again, and you can't find a way to get back in. That's maddening. I've been there. And I thought to myself, I just defeated myself. I beat my own self. I didn't have to have the market mess me up. I messed myself up. Don't do it. Ride trends for as long as possible. Just let it work. And I'll say it again. Take the stock and put it on a second page. You'll do better for it. Have a price alert slip, but let the sucker, just let her work. Let the sucker work. Things are good.
Perfect. And we've got some more great questions.
Okay, buddy.
Leo says, once added to a full position, do you have one stop for the whole position or separate stops for each additional buy?
Great question. Normally, good question. Normally separate stops for each additional buy. Okay, I'll manage them, the total position, but I'll manage each one separately. Let's suppose that we buy a stock and it goes up in price and we buy more at 42 bucks. Okay, and we'll quantify the number a bit. We buy 100 more shares for $42 and the stock goes up and we own more down at 30 and the stock goes up and then reverses back down below that 42. If it's doing it on fairly heavy volume, you know what I'll do? I'll sell those shares off. They'll be, which means I still own my original shares at 30 bucks. I still have those, which is very good for us psychologically. It's good for our head. Don't think about average price. Handle those shares separately at an average cost of 30 bucks because in those other shares, you basically walked away for nothing. Right. Managed them. And that helps you.
Perfect.
Alrighty.
And another question here. What would you do if a stock breaks out, moves up 7% in a day? So maybe you bought some extra shares, you pyramided in, but then reverses down 5%. How are you managing those extra buys?
Great question. If I have a stock that runs up, I'm going to be specific to answer this question specifically. You buy a stock and it makes a fast move and then it starts to tail back down hard. I'll sell those shares. Why? Because I'm wrong. The chart is telling me that I'm wrong in my buy and I've got to sell, which also leads to a very important point. I stress, buy at the right spot. Never buy a stock that's really extended on the daily bar. Don't do it. It's a recipe for a pullback. And you know what's frustrating? Losing money on a stock. You know what else is frustrating? You chase a stock and then it starts to pull back and you paid way up for it and it pulls back just a little bit and you go, God, I got to get out of it. I better get out of it. And you get out of it and the stock pauses and goes up again and you can't find a way to get back in. You beat yourself. Don't do that. Buy at the right price. Don't chase extended fast stocks. All right. You just can't stress that enough. Great tactic related to that too. If you do that, continue to watch the 30-minute and the hourly and the 30-minute chart, and maybe even 10-minute. If it starts to tail off that spot or lose the spot on a shelf on lesser time frames, sell those shares. Keep your other shares from down lower, but sell those shares. Manage those separately. And it works. It's good. It's good financially and it's good psychologically. So
perfect. And speaking of kind of a stock selection, we talked about the fundamental aspect about it. So you've got your screens there, you've got your universe of stocks there. How do you narrow it down every week and every day to specific stocks that you're watching for breakouts?
This is great. Folks, I love your questions. These are good questions. You're engaged. Good for you. That's how leaders are involved. They're looking, they're trying to get better. Every day I make a list. It's called the key list. What am I looking for? I'm looking for stocks. I'm just going to give it to you. Okay. I love stocks this is a recipe for a great cake. All right. I love stocks in the top 40 groups. I love stocks that last quarter's earnings were 40% or higher. I love stocks that last quarter sales were up, or the average sales for 2 quarters were up 40% or higher. I love stocks over the 50-day. I love stocks over $15 a share. I love stocks with an accumulation distribution of A or B. I love stocks that are within, I said, 15% of 52-week highs. That's a recipe for a winning stocks. Manage those and let them work. But now let's suppose you buy it and it lifts up and it reverses back down. Don't let that turn into a loss. Never let, if it's a fast move up and it starts to reverse down, never on a $20 stock or a $30 stock, never let a 3 or 5 point profit turn into a loss. Cardinal sin, don't do it because that big tail bar is telling you you're wrong.
Right.
So anyway.
Yeah. Getting back to the question, how do you form that key list?
Oh, okay. Sorry. I got off on the tangent.
No problem. That was great.
Okay. Every night I'm really big. The reason folks, I'll tell you something. I'm really hung up on risk management. Let me tell you, I really
For a
am.
good reason. For a good reason.
You got it. And again, I had to with six of us and my mom that I was supporting. So here's what you do. Every night I run all my screens. I have about 7 screens, each one with different constraints. I put them all together in a master list. I sort them by industry group rank first, percent off high second. That's my master list for the week. You can say, how many stocks you got on that list? In a crummy market, 100. In a good market, 200. That's it, 200. I sort it, this is important. I sort it by 1, industry group rank, 2, percent off high, the leading groups, the leading stocks in each group. And then all I do is I hit my space bar and I go from one chart to the next. And this is very important too. I have daily charts in my middle monitor, and on my left-hand monitor, I have weekly charts. I refer to both of them, and I'm looking for very clean and simple entry patterns, as we've discussed already, that everybody can see. If it's good and it makes the cut, I put it on the key list. And that's going to be on my list that I send to my VIPs that night or later in the afternoon. And on the list, I give the stock ticker symbol and the buy price to the penny on where we're looking to buy it. And I might have a little note section in there to help them. So that's how I make my key list every night. Now, let's go further here, if that's okay with you, Richard.
Go for it.
I have about 8 or 9 screens on MarketSmith. All right.
Mm-hmm.
I run them every Saturday. I put them all together into a master list. And as I stated before, I sort it by industry group rank first, percent off high second. That's my list. That's my list for the week. But I do something else that's important. During earnings season, and this is for all of you, please, I'm begging you, please know the earnings dates on your stocks and know if it reports at night or if it reports before the open. Please know the earnings dates so you never have a hit. I've had one hit. It was on MasterCard 20 years ago. I was like $12,000 in 2 seconds. Stupid, stupid. Know the dates. That will help you dramatically. Another point related to that, never buy just before earnings. Don't do it. You can say, but man, it might gap up huge. I don't know the future and I don't have inside information. Control that. Be careful with earnings dates. I really pound the table on that. Sorry if I got off on a tangent on that, Richard, but there's just a lot of things that I think are quite relevant to successful investing for the long term.
For sure, for sure. And I've realized that buying right solves most of your problems. If you buy right at the proper pivot point, everything's going for you. You're able to absorb that shakeout that usually happens. What would you suggest to people who are maybe working full time and they can't be watching the market during the day?
Great. This is a great question. We have a lot of EIPs that work full time. Good, man, that's huge. So it's like, how the heck do I do this? See, this is great. You know what I love about this? This is the real world. This isn't hypothetical stuff. It's like, hey, man, I got a job. How the heck do I do this? This is great. This is what you do. Focus only on the stocks in maybe the top 40 groups. Focus only on charts. Oh, I'll take that a step further. Fundamentally, focus on stocks with great earnings and great sales over 40% or higher. Focus on stocks with a composite rating over 90. Focus on stocks with an accumulation distribution of A or B. I mean, I'm giving you a recipe for a cake, okay? Mm-hmm. Focus on stocks that a 6th grader could look at the chart and say, boy, I guess if it goes across that line, Mom, it'd be probably good to buy, Dad, right? Do only those. And this is what you do. This is the real world. This isn't textbook. Put in a buy stop. Not for the full amount. Remember we talked about rules of proper pyramiding? You can say, well, I can't watch it all day. Control risk. It's more important to limit losses than it is to try to make a killing. All right. So here's what you do. Put in a buy stop. Let's suppose the breakout on a clean and simple basis, $22. Let's just use that for a number. Put the buy stop in the night before or the morning, before you go to work, whatever's good for you. Put the buy stop in at 22 and then do this. Put in the contingent sell stop. I'll say it again. Put in the contingent sell stop. What's the contingent sell stop? If the buy stop is triggered, the sell stop becomes a order. If the buy stop is not triggered, the sell stop will not be activated. So you don't have to worry about selling a stock short. That's gone. It is called a contingent sell stop. And I'm sorry if I'm really being wired tight with this. I just don't want to hurt anybody. All right. Put in a contingent sell stop, a point or two below where you bought it, whatever it is, whatever the price is. I'm going to say this again. You got a job, focus only on clean and simple base breakouts of leading stocks and leading groups. Don't do anything else. And put in the buy stop and a contingent sell stop. During lunch, if you have an opportunity to look at it on your computer or on your phone, if the stock's moved up and it looks good, raise your sell stop to a point or two above break even. What's great about that? No matter what happens, you're going to make money. That night when you go home and you look at the chart at your home office or at the dining room table, wherever, if the stock's made a good move, raise your sell stop maybe a couple more points. Worst case scenario is you're going to make money. The next day, do the exact same process. As long as it keeps working, let it ride. After it's made a good fast move, sell 20%. You've guaranteed yourself a profit. Change the sell stop so that if you had 100 shares, you've only got 80 now. Okay, don't forget to do that. And if it continues going up, raise the sell stop. You don't have to look at it during the day. I've had stocks, honest to goodness, I'll never lie to you. I don't even have them on my front page. Why? Let them go. I got a price alert set. Just let them go. That will help you. Less stress leads to clearer thinking. It'll let you ride the trends a lot longer. But I do stress, please only do this on really clean and simple base breakouts. Don't do it on pullback setups. Just, you're going to be at work and it's going to mess your head up. Don't do that. Be a good risk control person and you'll be in the game forever. So.
Perfect. And we've got a great question here, asking if you can break down one trade from the buy point, the pyramiding, all the way until your exits. I don't know if you've got a good example that you could share.
Well, we can sure find one. Let's go in here and see what I got. Let's just, I'm just going through the charts real quick. Hold on. I'm sorry.
Yep, no problem.
Oh, here we go. Let's do this one. This is real world, by the way.
Sure.
Does that come in?
You might have to stop sharing and then reshare it.
Okay. Whoop, I think I messed that up, buddy. Hold on.
No problem. If you click, yeah, no problem. Do you see the stop share button?
Yeah. Oh, hang on.
Yeah, go for it.
There we go.
I'm not seeing it come up just yet.
I apologize.
No worries. We'll figure it out.
Yeah, we'll get her done.
So have you clicked the stop share button?
Hang on. I'm looking here. Let's try this now. Now I'm going to click create post, okay?
Okay.
Oh, I don't think that's going to work, Richard. I apologize.
Hey, Richard, can you hear me?
Yeah, I can hear you, Red.
So, Pat, go on screen 3 that you were on with just drag that and make it big.
Yeah, that works.
Just
Thanks,
double
Ray.
click. Yeah, just click the right beside the X, the middle one, like the icon in the middle. That will maximize your window.
Yeah.
Yeah, just click that, and we're good to go.
Yeah.
Hang on. I'm trying here, Dave Nabbit.
Pat, just stay on screen 3, and then have anything on screen 3 will show.
Yeah.
Okay. Do you see Microsoft right now?
I see.
Yep.
Yeah.
I see Microsoft. You just have to click the button.
That's a good example as well.
Okay, let's look at Microsoft.
Yep, that's great.
Can I just leave it right there?
Yeah, can you press that maximize button?
Heck yeah. Look at that.
Boom.
Stories of modern technology. I apologize for the confusion. I'm sorry.
No worries.
Okay. Thank you for your patience with me. Here we go. This is the real world. We owned this. This is Microsoft. Little shelf right here. Lifts off right there. This could be what's called on my max list. Max list includes stocks like Apple, Amazon, Baidu, Alibaba, Google, Tesla. I mean, the big Facebook, the big name stocks institutions have to own. Let me think about that. Look at Microsoft. Clean and little shelf right here, and it lifts, and then it starts to run, and then it goes sideways again. And we buy more. And then it works its way up.
Do you know at that point how much you had, or what percentage of your buys were, of your full position?
Oh, I was fully invested.
Okay.
100% in it. 100%. A couple of buys here, buy here. And then we bought another place. We're loaded in it, which leads to a very important. You're like, why? Well, there's no reason to sell it. It's just trending on up to 21 EMA. Now, you see this bar right here? You see that big gap down? On volume, a big volume pickup, right there, we're selling some. We're selling on that bar, okay? Is that coming through clearly?
Yep, I can see it.
Okay, very good. Then it gaps up here, all right? And I'm just pointing this arrow out. It gapped up and it closed a little bit off the highs, all right? But it's still okay. And then it pulls back on less volume, and then it starts to pick up again. And note something, folks. On this bar, it gapped below the 8 EMA and fell a little bit below the 21. And we had a good gain here. We had a really good gain here. So we sell some here. We're still okay here because it's above the rising 8, all right? And this isn't that bad of a bar. Gaps up right here. You see that bar? It was still above the 8, but I want you all to look at this very closely. It gapped up. You see the open right there? And it closes here. It gapped up and it reverses down, and it's still above the 8, but look at the volume surge. That's the heaviest selling volume for the entire move.
Right.
That bar, we're selling more. Okay? We sold 2 times, and then it rallies up. And this is what's beautiful about studying price and volume. It's rallying up, but note this. You see the selling volume on that bar? And look at the buying power. How's the buying power, folks? It's much less. It's wedging up on decreasing volume. Then it starts to lose right here. It starts to lose the 8-day on a slight volume pickup. But the next day, look at the volume that comes into it as it breaches the 21. Sell more right here. And the last sale right here. Dropping down below the 21-day and dropping. Now, it gapped down and we sold right at the open. Excuse me, no, I take that down. It gapped down, shut up, and then we sold it and we were out. Now, somebody would say, gosh, you should have just sold it all up here. I don't know the future. I know this. I've got a great gain. I'm going to let the thing work as long as possible. But when it starts losing the 50-day on heavy volume, we're gone. The rest is gone. And you can say, well, it closed above the 50-day. Team, I'm going to share something with you. I don't know the future. I don't believe in... It's called investing through the rearview mirror. I live in the now. And if it's doing this, I'm out. I'm out. Why? Because the price and volume action is telling me they're getting out of it. And they did. So anyway, there you go.
That's perfect. And Pat, I think we'll wrap up with just this one last question, which is a good one to end it, from Andrew. How do you train yourself to become a more disciplined trader?
Good question. But Richard, I got a lot more that I want to talk about. Can I have another hour or anything?
We'll do it. We'll do this all again one more later on for sure.
I love that smile right there. It's like, yeah, Patrick, you're crazy. Okay. Here's how do you train yourself? Well, I guess it's part of my background from some of the things I did, some of the stuff that I helped people with through life. Okay. And very, very serious situations, some life and death situations. And so I sit here and I say to myself, I'm here for a short time. We all are. And I'm not trying to sound like a downer, but we are. What are we going to do with the time that we were given? Am I going to contribute to myself? But more importantly, am I going to contribute to my family? Am I going to contribute to those around me? What can I do to help them? I will make myself study past winners. I will stay 100% focused on those, knowing that they work. And when they don't, I know that I will control risk. I'm in control, not the market. Now, could I ever have a gap down? Yeah, anybody who's never had a gap down is a liar. Okay, yes, you'll have a gap down. But by controlling risk and selling some into strength, we know that we're in control and we have the discipline to continue with it. I do have to say this though, I can't stress this enough. Two things. I've said it before and I'm saying it again. Limit losses. Always limit losses and let the stock run and trend as long as possible. And you're listening to a man that for years didn't do that. And it cost me financially, but it also cost me emotionally because I let myself down and I let my family down. I said, I have got to let it run on the 8-day and the 21-day and or the 50-day as long as possible. And don't sabotage myself. And do that. I need to say this too really quick. This is important. First off, I thank you all for your time. I really mean that from my heart. Secondly, maybe I'm getting off on a tangent. Please take care of yourselves. I say this to the VIPs all the time. Take care of yourselves mentally, emotionally, physically, spiritually. I encourage you to read. I encourage you to eat good food. I encourage you to exercise in some way, shape, or form to relieve stress. Get away from the machines. I was there for the 80s. I've been doing this a long time. It's healthier to get away. This is a great quote from Abraham Lincoln. If I had 8 hours to chop down a tree, I'd spend 6 hours, I think it's 6 hours, sharpening my axe. Take the time to sharpen your axe. Study and then pull back from it. It's fun. It's invigorating. It's mentally challenging. But it's very satisfying. So anyway, I'm sorry if I went a little longer on that, Richard, but these are good questions and I want to do it justice.
No, perfect, Pat. Thank you so much for your time. I'm sure everybody in the chat and everybody watching got a lot out of that. So thank you, Pat, for coming on and sharing your experience and tactics as well. With that, we'll take another quick 15-minute break. And then next up, we've got Ben Bennett, and we're looking forward to that. So thanks again, Pat, and take care.
Thank you, Richard. Appreciate it. Have a good night and a safe weekend.
You too.
Thank you.